Aptos is in a clear free fall. In less than 9 months, the APT token went down
by 94%.
But is this maybe an opportunity? Because the idea is to buy low and sell high, and APT obviously is not high right now. There are two things at play here. The first thing is token unlocks. It's an expanding supply of APT. And when the demand doesn't grow as quickly as the supply, the price tends to go down. Now let's have a look at how much the supply of Aptos is actually increasing. The current supply is 184 million tokens, and 1 year from now this will be 390 million tokens. So the number of circulating tokens will more than 2x. It will increase by 112% roughly. The tokens will go to core contributors, and the people that will get most of those tokens are the investors and the core contributors. Everyone will get more tokens, but it's really the token unlocks, the insiders of the project that will get their tokens available, ready for sale. In other words, if you now buy APT, you will simply just get a stable price without any appreciation if demand grows by more than 100% in the next year. But still, this chart looks enticing, right? Buy low, sell high. Yes, we could go down by 35%, but there's also upside potential of almost 300%. Now, Aptos clearly is one of those tokens that goes very much with the current prevailing trend, right? Currently, the price tends to go up and the price simply shoots higher and higher. When the momentum is negative, then the price simply continues to go down pretty consistently. Now, we can time this and we can backtest that timing. We can time this, for example, with moving averages, right? The idea is that you buy in whenever the price is above, that you sell whenever the price is below the moving average. But what's the best duration? Is it the 100-day? Is it the 50-day? Is it the 20-day moving average? What's the best duration to time Aptos? I've made hundreds of those kinds of backtests trying to find out what's historically the best. How can we historically time various altcoins the best? And for most of those altcoins, I figured that using moving averages following the current trend is actually a winning strategy. And it doesn't even matter too much what kind of a duration you take. You can optimize this, right? You can take the best moving average, but in aggregate, using moving averages, timing the market tends to outperform just buying and holding. So in crypto, timing the market is better than time in the market. It's different to stocks. Stocks are very, very efficient. The stock market is very professional. There are a lot of quant hedge funds in the market. It's very hard to beat all those full-time analysts. But in crypto, that's a bit different. In crypto, there's mainly retail money. And so even relatively simple quantitative approaches can work. And so when we were following that strategy, right, we go long whenever the price is above and we bet on falling prices whenever the price is below the moving average. When we follow this trend following strategy for the simple moving average and for the exponential moving average, we can find out on a daily time frame what's the best moving average duration. So it's the 14-day for the SMA and it's the 7-day for the EMA, the exponential moving average. This is a different way to look at the same data. So on the x-axis is the duration of the moving average. On the y-axis is the annualized return. In black, we've got buying and holding. So over the test period, which starts in October of last year, we pretty much got out plus minus 0. And we see that pretty much all the moving averages tend to outperform just buying and holding. Only the very short 1, 2, and 3-day moving averages tend to underperform because we do have trading fees in here, 0.2% for every trade. But once you go longer in the moving averages, we tend to outperform buying and holding. Not for every single moving average, but for most of them. And some of them do outperform very, very nice. And so what moving average should we plot here on our chart? We've got several options. I personally prefer the 14-day over here. Even though the 6-day is slightly better, but we can see that even if we are slightly off, right, and this changes a bit over time, right, the 13-day would have been good as well. I feel a bit more comfortable using this, because just being slightly off here and getting a slight shift over time reduces the performance massively for the shorter term. And for the shorter term also, you have to trade in much more actively. You have to buy and sell all the time, because we see those crosses much more often when the duration here is shorter. If you've got only, say, a 7-day moving average, you're buying in and selling all the time. But if you've got a bit of a longer term, the 14-day, this tends to be less of an active trading. And so let's adjust this. 14-day, that's the best moving average historically. We would have bought over here, we would have sold over here. And currently, that moving average is at $5.27. In other words, currently we are bearish. According to the backtest, we should wait until we see a bit of a rally and only then consider to get back into Aptos. So from the current price, that's a 7% rally. Now, how do I personally position myself here? I talked about Aptos with the premium members. And unfortunately, you cannot short this token in a decentralized manner. There's no real Web3 application where you can short Aptos, bet on falling prices. If you're using centralized exchanges though, this is different. You can short Aptos, APT on centralized exchanges. And this is, to be honest, the better approach to go about this, in my opinion. Instead of waiting for the rally, instead of hoping for a reversal of this trend, I think it's wiser to simply just go with this current trend. And again, the main reason for this is the massively expanding supply. In a bull market, demand can easily double within a year, no problem. But currently we are in a bear market. Nobody is interested in crypto. Crypto content isn't watched that much. There isn't a lot of new entrants into the space. Capital is very tight. It's a player versus player game. And when you then have a project that increases their supply that massively, it's really a massive, massive uphill battle. So I think shorting the token, betting on falling prices makes more sense. But shorts in general are dangerous. And so this moving average could simply just be a potential stop loss, right? When you're currently betting on falling prices, you could close that short whenever we close a day above that moving average. So the thesis is that this continues to go down, but if you suddenly see positive news and this shoots up, that's then when you might want to close it. So simply using statistics, using those back tests to find a proper approach to mitigate or to manage risk. Let me know what altcoin to analyze next. Join us on Telegram. Link is down below.